Whether it's in the for sale or rental market, the affordable housing crisis is only getting worse. Apartment developers in particular say it's just too expensive to put up quality, low-income housing. But developers just got a big boost from the recently passed tax and spending bill. I caught up with Jonathan Rose of his namesake company, who's been in this business for more than 2 decades.
This is a tough time, I think, for all of real estate is being challenged by higher interest rates and by higher construction costs. And by the way, building department requirements and all the frictions that are making real estate difficult. But there's also a lot of support. And our job is to weave the pathway in between the complexities, the challenges, and the opportunities.
And you just got a big boost, of course, from the recently passed tax and spending bill. Explain all of that.
The dramatic expansion of the low-income housing tax credit, this is the main tool that we use to build new affordable housing and that we use to renovate and improve deeply needed existing affordable housing. There's been bipartisan support, by the way, for this increase in the low-income housing tax credit for about a decade, but there's never been the political vehicle to attach it to, and finally we got it. And it's a big boost for the creation of more affordable housing. In fact, the United States has a shortage of about 10 million units. This won't solve the whole 10 million unit problem, but it'll be a big help.
But when we look at affordable housing, though, I've seen some of your buildings. They actually look very luxurious. I know there is this play to have some units affordable and some more luxury, and then there's kind of the NIMBYism of neighborhoods where they don't want to see these affordable units, so then you put the units in other places that you kind of pencil in some kind of math. I know developers do that. How exactly, with your companies and your buildings, do you really make it affordable? I mean, for lower income people to actually live in these buildings, which to me looks super swanky.
Right. So first of all, let's talk about the looks. We're deeply committed to creating beautiful buildings. One of the reasons why communities oppose affordable housing is because a lot of affordable housing that was built in the 60s, 70s, and early 80s was cheap and ugly. And I wouldn't want it in my neighborhood either. So we're building really well-designed buildings, very green buildings that we think are improving the neighborhoods that they're part of. And the other thing is we're long-term owners. And so we're building buildings of substantial quality because in the long run, that's going to be to our benefit in terms of lower operating and capital costs.
You talked about green buildings. I just want to get into that for a second. Is the demand from the consumer more for affordable or more for green? And does it cost more to build green or to even renovate or convert to green?
So the demand from the consumer, absolutely number one is affordability. Because when you're a lower income person, a working class person in the United States, just making the numbers of your daily life work is so marginal. And if we can reduce housing costs, and so in affordable housing, we define affordability as not costing more than 30% of somebody's income for people who are earning less than 60% of an area median income, or maybe 80% in some cases.
So give me the rent on that. In an average city in America, what would the monthly rent be?
So
Affordable.
it varies enormously by area median income, but an affordable rent might be $800 or $1,200 a month for a studio apartment and $1,500 to $1,800, say, for a one bedroom and maybe $2,200 for a two bedroom. Although those can vary. So for example, in our Sendero Verde project, there's 7 income bands. And so there may be one family that's paying $300 a month for an apartment and another family that's paying $2,800 for the same apartment. Getting back to your point, number one, what matters most is the affordability. But when we build greener, number one, we're lowering our energy costs. Number two, we're lowering their energy costs, which helps their long-term budgets. And number three, most modern building materials have a lot of toxicity in them. And particularly low-income people are living often in places that have mold and have lead and have dust and other environmental hazards. What a lot of families tell us is when they move into our projects, not understanding what the green benefits are, and all of a sudden their kids stop having asthma and their kids are attending much more school than they're able to in the past. They thank us for this incredible benefit that they didn't understand. Getting back to your question on cost, I started doing green buildings in the early 1980s. and 90s when there was um, no subsidies for greening buildings. There was no interest in greening buildings. So we had to learn how to make our buildings green without spending more. Uh, to make our buildings super green, like the Sendero Verde project and like the Faircliff, these are passive house projects. Those cost about 5 to 7% more to make the buildings this super green standard. But for the acquisition rehab, the typical projects that we're buying in our investment funds and making green, these are buildings that need new boilers. We might as well put in an energy efficient boiler. These are buildings that they need the toilets replaced, so we're putting in water efficient toilets. We're actually getting returns on our green investments. We aim to get a 5-year payback or better in all our green strategies in these in our acquisition fund projects. And a 5-year payback is a 20% return.
So, just to clarify that, you're talking about federal subsidies because it's affordable housing, while we are seeing a pullback in incentives for green building in the broader market from this administration, correct?
Exactly. Okay. So in again, in what our current fund is doing is buying the existing affordable housing. Those incentives are almost all the state, local, and utility incentives, not federal incentives. There's a federal weatherization program that occasionally contributes to our buildings too. But primarily it's the local incentives that we support with our equity to get our buildings to be as green as financially feasible.
So, if you're an investor out there and you're interested in affordable housing and you've thought before, well, I can't make a ton of money at it, but obviously you can, what are some of the ways for investors to get in on the affordable housing play?
So, affordable housing is highly regulated, it's very complex, and it's not something for the individual investor to do on their own. Um, but one of the ways is to invest in in affordable housing investment fund. We're not the only ones. By the way, our fund is we're just celebrating the completion of raising $660 million. So we are not looking for new investors right now, but there are others who are. That's probably the best way to get involved.
So, what's some of the competition in this space? You are a large developer. I believe you're in uh, 20, how many, 14 states that you're in, as well as the District of Columbia. What's the competition in this space?
The competition is fierce. There are a lot of fantastic other um, uh, for-profit affordable housing developers. There are larger and larger investment funds. For example, Blackstone's April Housing is in the market. Naveen is in the market. So there are larger institutional investors. And then there's some very substantial local not-for-profits who also are really excellent and competitive at building and buying affordable housing.
So, what do you think is the better play? Developing new affordable housing or converting older housing, which we know there's a lot of, but it's, B class, C class, converted into A class affordable. Which is the better play?
Um, they all have their strengths and weaknesses. We need them all. One of the advantages about converting the existing buildings is they don't take a lot of credit or guarantees. New development takes a lot of financial muscle. The companies have to have the strength to be able to put up the guarantees to do it. Um, but we need them both. And there's financial opportunity on both sides.
Now, as we see the for sale housing market get much more difficult, houses are not moving right now, sellers are pulling back, buyers are not getting in. We are seeing more people move toward the rental housing market, not necessarily affordable, but some luxury, some mid range. Rental housing, apartments, which we've seen just a ton of record supply come onto the market, most of it, luxury class A in the last 3 years, but a ton of supply. We thought that would help rents come down. We're starting to see rents tick back up again. How does that factor in now that you're seeing more renters stay renters and not become buyers? And then you have, again, those who need affordable housing.
Okay, so first of all, it varies dramatically market by market. So, for example, there's been overbuilding in Austin, Texas. So rents are beginning to tick down there, where there's been underbuilding in New York City. And so the market rate rents continue to rise. So, number one, real estate is always very, very local. Number two, there's an interesting phenomenon, psychological phenomenon, which is that America's middle class was really built on home ownership. And there was a very strong aspiration for that. We're seeing that disappear. I think in part because it's so much more difficult to become a homeowner that people are giving up and renting, but also because people are actually recognizing that renting can be a better deal for them. It can actually be cheaper to rent than to own a home today, particularly with the rising cost of insurance, the high interest rates, et cetera. So there's also growing interest in rent, but both the market pressures pushing to rentership, but also kind of an interest in being a renter. And those are keeping the rental markets in the cities where there's not oversupply super vibrant.
So, if you were to pick markets that you would think are the best investor markets for affordable housing, what would they be?
Well, again, on affordable housing, one of the interesting characteristics is that in almost every market around the country, there's a supply-demand mismatch, that there is simply not enough affordable housing relative to the number of people who need affordable housing. In almost every market, the apartments are full, will be full, and have long waiting lists.
And there's been a lot of controversy recently in New York City about the future of the city, especially when it comes to the price of rentals with a potential new mayor, Mamdani, who is getting very popular. What's your take on how that's going to affect your business if he is elected?
Well, the current regulations for regular housing in New York City are not positive. There was a bill passed in 2019 that restricts rent increases that has really harmed the all but the top end of the real estate market in New York City. And hopefully he will understand that and we can get some modifications to that. New York City has been one of the strongest cities in terms of support for the development of new affordable housing, and we expect that will continue or maybe even grow. New York City has something called a pipeline, which is the list of projects that are ready to go, but just need subsidies and support to be able to get built. There are about 300 projects in the affordable housing pipeline, and I think the city build, can create 12 to 20 new ones a year. So hopefully he will lead in bringing more resources to the affordable housing funding so we can get more buildings built. Um, the other thing that's so important is affordable housing preservation, is taking these 30, 40, 50-year-old projects and renovating them, investing in them, because they do, they get old. And the windows start to leak air and the plumbing leaks, and they need a lot of investment. We have not been able to invest enough in affordable housing preservation in New York, and hopefully that's something he will recognize and also expand resources for.
But is there a good return on that investment?
There is a sufficient return. Okay, so let's get to the bottom line. We offer our investors a 9 to 12% IRR net on their investments over a 10-year hold. And that essentially also leads to about a doubling of their investments for a low risk, high impact return. And by the way, our actual realized track record is higher than that.
So, just finally, I know we've always needed affordable housing, not just in New York City, which is incredibly unaffordable, but everywhere across the nation. Why is affordable housing so critical at this point in time?
Our nation is seeing a dramatic increase in income inequality. People's lives are just becoming much more unaffordable. They're just the ratio of what they're earning and what their costs are, not only their cost of housing, but the cost of transportation, their insurance costs, all kinds of costs have been dramatically rising. But housing is foundational. Housing is where you live. A friend of mine says, you can't do homework if you're living under a bridge.
Jonathan Rose, thank you so much.